currencies are the most popular with traders?
It's the majors. So that's the euro against the US dollar, which is by far the sort of the biggest currency pair and that most heavily traded everywhere. And the reason for that is quite straightforward. I mean, if you take looking at sort of GDP of US against the Eurozone, you know, they're quite roughly matched, and between the two of them, they probably account for the best part of half of all the world's GDP on an annual basis. So that's the biggest pair. But below there, you've got the dollar against the yen, and you've got sterling against the dollar, another big pair. And then sort of further down then, you've got things like the euro against sterling, the Australian dollar against the dollar, the Canadian dollar. You know, those are other sort of, they're sort of second ranking currency pairs. But yeah, I mean, right out there at the top is the euro against the US dollar. I mean, it's the most liquid pair, most actively traded. It has the tightest spreads, and you know, it's also one of those things that traders look for to see, well, you know, what's going on in the world today, what's happening to the dollar, because I mean, what happens to the dollar in particular drives so many other things. So that, you know, that's out and by far the number one.
What are the best times to trade the forex markets and the times to avoid?
Well, I think the best times are when you've got the most liquidity. So this would be sort of during London hours, certainly, any time from 8 o'clock onwards, through, you know, until the New York close, which typically, again, is about 8 o'clock for FX. Now, that's not to discount the Asian Pacific market sessions, but because there certainly is liquidity then. But, you know, if you think about London hours, you've got the overlap of London, you've got the tail end of the Asian Pacific market at London as London starts. You've got London, which is the centre for all forex trading. You've got the European markets are open, and then you've got the US in the afternoon. So, you know, I'd say that sort of 8 a.m., 8 p.m. London time is best, purely because the depth, liquidity, the volumes are going through then. And the reason what I would try and avoid, you know, those bits where you those bits specifically where as 8 o'clock comes at either end. I'd be wary of those because, you know, you can see a big drop-off in liquidity around those times, or you can see traders coming and coming out. People sort of liquidating positions, re-establishing positions. You're not quite sure sort of who's doing what and why. So I'd avoid those times. The other times I'd avoid, well, I mean, people can choose to sort of trade over figures, but I'm very wary of taking on a position ahead of a big event, whether it be the central bank meeting, a non-farm payroll figure, another bit of important data, anything like that, I would tend to stay back from. I mean, some traders will trade those things specifically, but you know, it's a bit of a high risk game really, to sort of try and predict or guess what a particular piece of data is going to be, or how the market's going to react, or how a central bank, what a central banker is going to do, because things might just not pan out the way you expect it. So I'd be wary of that.